Okay. Okay. Um. Whenever I think of that song, I think of Michael Michael Jordan. That gif of him, like, bro. If you're tapped in, you're tapped in. If you know, you know. If you don't, you don't. Anyways, bro. Um. Let's do a weekly recap. I said I was gonna do a weekly recap at in the beginning of the week when I initially first lost 2 grand, and I think we did a bit of improvements throughout this week. Learned a bit of stuff. However, before we go and do that, let's quickly talk about why there's no review today. The reason why there's no review was mainly because I was in the ER all day. Diddy got to me. He finally caught up to me. Did some bad things to me. Landed me in the ER. Touched me a bit, but, you know, fortunately I got out safe and sound after waiting 7 hours. I literally could have gotten diddled in that time again. Like, what are we talking about here? Barely an emergency room, more like an inconvenience room, but whatever. I guess that's what happens when you're broke. When you're rich, it's definitely different. It's like you just TP to your doctor slash TP doctor, and you just spawn there. I'm sure it is. Um, but anyways, yeah. So recap review will be out tomorrow. 2 minutes of yapping, but let's get into today's weekly recap. Starting off on the P&L, like always. This week we ended the week break even. Fortunately, today was, in my personal opinion, I would grade it as an A day rather than an A plus day, and I'll get into why. But first, let's start back off on Monday. Monday, we took the two first initial low probability trades this week, like all the others, but really this week as well. Could have been another week where we were in a solid amount of profit. Maybe not a couple $100s of profit, you know, or a few $100s of profit. Maybe only a couple $100s of profit. Maybe $200 to $300 of profit. However, due to our first original initial low probability trades on Monday and a singular low probability trade today, it resulted in basically a break even week, which I'll still take that. However, it's not about I'll take this, I'll take that, pause. It's about continuing to execute in your, in your model, remaining disciplined to it, and avoiding the lowest probability setups. However, I'm still working on that. I don't want these weeks just to be like, oh, well, I should have, would have, could have. Like, that's not what I want. I want genuine improvement out of these weeks. So those shoulda, woulda, couldas turned into I did, you know. But I don't need to go over Monday's trade. However, let's recap today's two trade ideas we ended up taking. The only thing I'll really focus on recapping this week will be risk management and Thursday. But let's start off on today the trades we actually executed upon. So coming into the trading day, quick little recap. I was bearish. I was looking to short. However, we had an initial long bias off of market open. Price action took out these lows, SMT'd off of them. I was looking to see price action come higher, take out these highs before looking at reverse lower here on ES as well. However, we displaced higher on ES. Once we took out these highs, I was looking for shorts. There was a short opportunity on ES right here. However, I ended up taking it on NQ, and I'll explain why. But before I do that, going into the first initial trade idea, this was one of those trades where you take and you sit there, you're like, I just reviewed not to take this. Why did I take this? This was that first initial trade. Bang. Oh, also I want to talk about a little breakthrough I had with my risk management that I found out. I'll also mention it in tomorrow's review, but I'll tell you guys here too. So anyways, we had taken out these highs, Wick formed internal took out internal liquidity, and on SMT was, or on ES was SMTing. Holy cow. So I ended up going short. I thought this was initial displacement lower. Executed, looked to target these internal lows, got stopped out immediately for $100 loss. for you guys that should already know, my total max loss on the day is $300, or two separate trade ideas split between $150 risk per trade idea. So that was a pretty low probability trade. I high key knew that. I flagged it as mid and low probability, I'm pretty sure. Yeah. Or I just flagged as low probability with miss your entry. But I thought this today we would have one of those moves where we do just wick out the internal highs and then displace lower. However, I was a little too early on that. Price action continued higher. We had news data release 15 minutes after that. Upon news data release, continue to hold these SMT or these highs that we were looking at SMT off of, and then shorted NQ once we've seen strong displacement back to the downside. This was a pretty clean trade. I only had one scaled in contract. My initial risk was $70, somewhere in that range. This TP'd at $400, even though I know it only says 1 at 2.41, should have been $140 win. However, like I said, I scale in, but unfortunately today we only got one scaled in contract. If we would have gotten multiple, sure would have been a larger day, but the point isn't about larger day, smaller day, or even P&L at all. It's about properly executing upon your model, avoiding for me it's really about avoiding low probability setups. However, still executed on this trade amazingly. I was kind of adjusting my TP here on my MFFU. I kept the limit. I didn't move it at all on Top Step. I was kind of messing around with it a bit. I wasn't being emotional with it. I was just toying with it. Eventually I just set it at these lows. Didn't do anything, didn't touch it anymore. I was like, I'm being stupid. Let me not leave room for emotion to kick in, so let me just set it and literally forget it. Price action, if we would have made a slight retracement, formed a new high, I would have scaled in an additional contract. However, we didn't do that. We just continued to displace lower and then taking out these lows. I could have targeted down here. However, I knew that was an extreme. And we had higher time frame SMT off of that. So I knew the highest probability target was low hanging fruit, which I targeted, and then price action later reversed. Pretty solid trade idea. But that first initial trade kind of knocked us out on a bit of profit because we had to make up for that initial loss, even though the win was more than enough profit to make up for it. It's just little like, bruh, could have ended the week in profit. Now let's talk about Thursday, because I had perfect trade direction. However, I chose not to trade. Where was Thursday, bro? I'm back at the 18th. And the reason, was it here? Yeah, it was right here. The reason why I chose not to trade this was because the SMT I was looking for us to reverse off of, or utilize this confluence to reverse off of, wasn't anything as significant as I'd liked it to be. It was one of those SMTs, or internal liquidity, you had to really zoom in to see. Now, some people may have seen something totally different. I know a lot of people long this day, and I still was as well. It was just low, or it was this low. However, it was something I had to scale down in time frames to see, rather than something I could see by simply going on the hourly or the 15-minute time frame. And oftentimes, when I have to really scale down in time frame to find it, there's a saying, I forgot what the saying was, but it's kind of along the lines of, if you gotta look for it, you're forcing it, or something along those lines. And I didn't want this to be one of those trade ideas that I was looking to force off of a mid probability, like really, in my mind, a low probability SMT. So I chose to pass on it. However, once price action continued back to the upside and reversed, I was looking to see this low SMT'd off of for an entry. We didn't end up doing that. Guess what? I followed my rules. Didn't execute that day, even though I knew exactly where price action was going to go, and for the most part what it was going to do. And that was completely fine. That was, I guess, why I didn't target this higher time frame internal. But yeah, now let's reflect on the risk management this week that I want to talk about. Kind of the newfound blah blah blah. I found out about my risk management. So risk management 100% this week could have been heavily improved upon. Those low probability trades, like I'm saying, is really knocking me out, man. Like I will be such a profitable trader as soon as I fix this. I guarantee you guys will be seeing like consistent profitable weeks for the most part. I hope, by at least profitable months guaranteed. Significantly profitable months, 10K months, 20K months, 30K months. As soon as I filter this out and get a full understanding of it, I guarantee you, because I'm already able to execute consistently while being inconsistent. That showcases my I don't know what I'm trying to say. That showcases that I still know what I'm doing. However, the bad trade ideas really are just leaking out those profits. If we do the math, this nightlight turn off. I actually need to turn that all the way up. My eyes are just getting molested right now. But calculator, can I not read? But let's just do the math on low probability trades taken. Oh my goodness, I already know what it is. I lost $450 this week just due to low probability trades. Let's just count one initial trade here, $150 risk. So, $360. $1,400 this week in losses just due to low probability trades, which I had to make up, by the way. If I would have simply had that $400 win, and then no, I'm not trying to like make an imaginary P&L and get dopamine off it. I'm just doing the math to see, hey, well, how would a future me execute, and how would the risk have been properly managed based upon the trade ideas? Just call it 120, 280. Like I said, it wouldn't have been crazy profit, but still multiplied across. I'm so dumb. That's still $1,000 week. That's still consistency. That's still a green week. Still significant enough in order to continue to push further. But yeah, risk management 100% could have been worked upon this week. Monday was just brutal. 100%. And we're going to continue to double down and reflect on Monday because I do not want Monday to happen again. But now, last thing. Oh, and obviously today's lower probability setup. That's why we're doing all the reviewing. But now what I want to talk about is this. I want to talk about what I found out about my risk management. Now, I am not a top ticker and I am not a bottom ticker, unfortunately. However, I do catch often high day and low day moves. That's just because I execute off of SMT and liquidity. That's just what allows me to. But one thing I've always been envious about with top tickers and bottom tickers has been the risk reward. I've talked about this in the past. For you guys that don't know, the reason why I scale in contracts is because I like high RR. However, I know based upon how I trade, I am not able to catch, 1 to 10s. I'm not comfortable top ticking and bottom ticking, and that's fine. There's nothing wrong with that. There's nothing wrong with that at all. However, that's why I started scaling in contracts, so I could still have that initial risk and continue to increase my profits by scaling in additional contracts toward the draw on liquidity, still having minimal risk on the table. Kind of like top tickers, and they enter a trade idea with $70 risk, and they have the 1 to 10 RR, and they make $700 if they're right, and if they lose $70. Now, I'm not saying I'm a top ticker or a bottom ticker. I'm just saying where I got the inspiration of scaling in contracts from. Also based upon how I like to trade. I was adjusting to my psychology to never feel quote unquote left out. Social media is a curse. But here's another thing I realized. It's not too far off from how top tickers and bottom tickers manage their risk. Now, I'm not talking about like actively during the trade. I don't know anything about top ticking and bottom ticking. I'm talking about their first initial idea when they just simply execute upon the idea with a smaller risk and higher RR. I do not have a high RR. However, I do, or my trades do allow, I realize this, By me simply scaling in an additional contract, it allows me to have a first initial trade idea be lower risk. What do I mean by this? I'll actually show you guys an example. If okay, I guess my trading view doesn't want to work. I can't place an order on replay trading. Okay, I can. Okay. Sell one additional contract, the SL being 97. Let's say my initial risk that I'm comfortable losing is $200, so 2 contracts. And instead, I decided with this trade idea to execute with one contract, $97, 50% de-risked. Now, that's just with this initial trade idea. But this is what I found based upon how I trade with a profit of, 200, blah, blah, profit doesn't matter. But this is what I found. Upon first initial displacement, for you guys that don't know, is when I usually tend to scale. Now I can't get it to the absolute second or tick here. But I'll do this candle even though it's a larger displacement candle. But I will scale in an additional contract and drag my SL to where it is now, validated within my normal risk parameters. And it's still even a little bit less than that. But this is a perfect example of literally how I manage my risk throughout the trade or during a trade. And sometimes when I like to go lighter risk and then scale in and then balance my risk out, if that makes sense. So I'm gonna say super simply so everyone can understand. I found that sometimes I like to execute upon a trade idea, take a trade with lighter risk upon the first idea of the trade, and when price action displaces in my direction, when it goes within my direction, I execute an additional contract which balances out my risk and still allowing me a higher RR trade with still having minimal initial risk on the table. Why, you may ask? Because let's use this trade for an example. Let's say, I literally did. Let's say I execute upon this short. Okay, lighter risk than usual. Let's say my initial risk would have been 2 contracts. Instead, this idea I chose 1. Guess what? I found that if price action reverses immediately and stops me out, I don't have to have my full initial risk or full initial commitment on a trade idea. I don't have to lose all of I don't have to lose, what am I trying to say? I don't have to risk all, my entire 50% buffer on a singular trade idea if it doesn't go within my trade direction. However, if it begins to displace within my direction, that's when I could start to get comfortable and scale in an additional contract, balancing out my entry, which also, is good because I already have confidence that, hey, we're displacing in this direction. But now I also have confidence with the trade idea that, hey, okay, this looks probable. I'm willing to continue to have size on this instead of just lighter risk, this time regular size. So, yeah, that's just what I found. And it was mainly because I was looking at my trades, my wins and my losses, and I was like, wait a minute. This doesn't add up. How do I have 13 losses and I'm like barely in drawdown? Like, it doesn't make sense. Like, you're telling me I'm in $200 in drawdown on the month, but I had 13 losses and 2 wins? Something's not adding. Like, the numbers don't make sense. I should have well overblown my accounts. I should have blown my accounts and more. Like, what are we talking about here? And I realized this because of those first initial trade ideas, and that's why you often, unless it's here or here, but I usually always stay below my $300 risk parameter. I never really get in that area. I wouldn't really count this, but let's count this, and this. This is definitely an exception, but even with these first initial ideas, well, yeah, that's just something I realized, and it's another step on how I could properly manage my risk moving forward. Now, some people may say, well, Light, you're just de-risking your already de-risked risk. Okay, leave me alone about it. No, and just to clarify, that's not the same thing, because I still have my initial risk parameters on the day on what I'm willing to lose on the first trade idea. However, I don't have to have the overcommitment, and I could still make significant profit, maybe even a little bit more profit, just a tiny bit more profit by scaling in an additional contract. But that's what I found. Maybe I'm wrong. Let's do a test right now, actually. Let's see if I would have made more money or less money. Maybe less, or maybe I like. Okay, so let's execute upon this idea right here with our initial risk, like total initial risk. Maybe it would have been. Maybe I'm making a tiny bit less, but even if I am making a tiny bit less, I get more. Okay, yes, definitely a tiny bit less, but I'm still getting more confidence within a trade idea before it displaces within my direction. I'm protecting my risk, even if it's only a couple of dollars. I'm willing to lose those couple of dollars to have a higher or higher confidence execution. Okay, 467, bro. Are we dead us right now? Okay. Versus see one initial contract, so lighter risk on the table. Price action immediately reverses. Guess what? We're fine. And let me do this 1, 2, and then after this, I promise the video's done. $378. I made 400, but whatever. But now the risk is balanced out. Still a little less than 200, and I have a ish. Okay, it's like $100 difference. Okay, this isn't accurate. Mainly because whatever, it's accurate. Whatever, piss off. You guys get the point I'm trying to make. The point I'm trying to make is it allows me to protect my risk and my trade positions before I actually commit to the idea. There you go. Leave me alone, bro. I'm done. I'm going to sleep. What time is it? Oh, I'm definitely going to sleep.